Finally, some nice, clean, high quality trading setups. And in this video, I want to review them. I want to talk about where I entered, why I entered, where my stop losses were. And I just want to break down this trade so you could gain some insight for it. Yesterday, I posted a little recap on my Instagram story. I'll post a link in the description below. If you don't follow me on there, it's a good resource that you're missing out if you're not following it. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. The link for this is in the description below. It's my only account. But now let's get into the pre-market plan. I post these every single day in the Discord of setups I'm watching, levels I'm looking out for, and potential trading scenarios. So now on the S&P 500, what we are watching for today was 4125 support level that I left on my charts, which is this dark green line over here. Scenario number 2 for the bullish side was if 4125 can be supported, we can see a reversal back higher into 4152 supply, which is this pink box over here. Now to support this analysis even further, I do not use the dollar very often, only when it's at important key levels or the structure looks nice on the chart. But essentially the dollar looked ready to break out here. And if the dollar is strong, not always, but a high chance, it's going to put pressure on the overall market. And we may see the market sell off, specifically ES and NQ. So the dollar today looked like it was about to break out. And this was going to support our bearish plan on the S&P 500, especially if the dollar could get above 103.80 to about 104. The bearish plan on the S&P 500 along with the dollar analysis was if we can get below 4125 and it acts as resistance, I would want to take the market short targeting 4112 demand. So now we have to understand these levels. The dollar at 103.80 to about 104 and the S&P at 4125. So now the S&P 500 opens up and in the first 30 minutes, we're basically chopping sideways where dips down get bought up and rallies to the upside get sold into. This is a condition of being balanced where if you're longing a breakout or shorting a breakdown, it's not going to work very well. You want to play the opposite where you want to look to long pullbacks and short failed rally to the upside. So the first 45 minutes was very, very choppy. We got below 4125, sold off into 4112 demand, and then began to start moving up. At 10:02, I sent out an update in intraday commentary. This is where I update my thoughts throughout the day, where I said it was very hard to read this action both long and short. How I want to play this is if we could get above 4125 and it acts as support, I would be open to longing pullbacks into it. Because of the strength in the dollar, yet the market's not selling, it leads me to believe that the latter may occur, which was if we can rally above 4125. So what really made me convinced about the upside today was how strong the dollar was in breaking its little pattern here. I'm going to go to a 30-minute chart. We essentially had this little consolidation that we broke out above, and the dollar was extremely strong above this little area right over here. So the dollar was very, very strong, breaking out of its structure, right? If we look at the first hour of the market being open, we had a very, very strong rally above 104. Now, this didn't really correspond very well with the S&P 500, as the S&P still was above its demand zone at 4112, and the S&P was not having an easy time selling off below its 4125 level, indicating the weakness that we want to see if we are a bear. So because of how strong the dollar was, yet the S&P wasn't supporting the sell-off that we normally would see on a strong dollar, this was kind of a red flag to the downside, and now I must look for ways, essentially on the tape, to play the market long now that the context is not so much favoring shorts and it's leaning more towards the side towards bulls. Now, what really made me play the market long is if you were watching the candles develop in real time, you would have seen a sell-off into this 4112 level and a break below pre-market lows. When you see something like this where we break a low and there's immediate buying pressure off of this low, so I'm going to pull up Bookmap here. This is the only way I could visually show you this. There was aggressive selling in our 4112 level where the market sold off aggressively. Many were shorting this low a day breakout for an immediate reversal to the upside. And after that heavy selling, a large bid gets filled. The market does start moving up and buying pressure comes into the market at the low. So this could be a sign for you to take the market long for a short-term scalp, meaning this setup has to work out in your favor right away for a reclaim back above 4125. This is not where I entered the market long, but reviewing this chart after the fact, there was a lot of trapped sellers at the low, and there was a lot of responsive buying here. So when you see something like that, especially in an area where many traders are looking to short something, this can offer a good high quality area where your risk is very small to play reversal, especially to the upside. This is now when I was in the Discord saying there's some nice action here at the lows at 4113, which hinted at a short-term reversal for buyers. So for now, to fuel this move higher, we need to see what I posted above to become true, indicating that buyers are buying at higher prices and accepting value higher. Essentially what this means is that now we've spotted buyers at my oval, but this doesn't prove much other than a very short-term reversal in the market. For the market to truly reverse and to see a trending move upward for the good portion of the rest of the day, you want to see prices get accepted at higher prices. Then at 10:18, I said if I'm playing long, this is exactly what I want to see. A move above 4125 and then a pullback near this range to hold / bid support the pullback to play long, putting my risk directly below it. This is exactly when the market looked like this. We just found those responsive buyers at the low, and now we're going to move back up above 4125. This was not a level that I was looking to long a breakout above. This was a level, other than the context that I've just said, that I wanted to see price accept these prices, indicating for a move up. So as soon as we broke above 4125, I wanted this level to act as support. Hence why I say a pullback into this level to hold, to play long, putting the risk below it. This is not hindsight trading. This is updating my thoughts exactly when they happen before the move occurred. So now with everything that I just explained, the market sold off back into 4125 perfectly. Many different times have we hit this level and immediately bounced. And at 10:27, when the market looked just like this, I took the market long with the stop loss below 4122. Now the reason why I did this was I wanted to give it a little breathing room below 4125. The market's not always going to bounce at your level perfectly to the exact tick. You have to give it a little buffer room, whether it be 2 points, 4 points, 6 points. And in this case, I was comfortable at 4122, 4120, that if we came below it, I was risking about 5 points to make a potential 15 points to the upside. Now I'm in long at this yellow oval right over here, stop loss below 4122, and my target was 4140, which was a gap fill. Essentially, the market moves up over here, and really what turned me off on this setup and why I scaled out some of my position here was we broke this little downtrend line. And remember what I said earlier in the video, that when many traders are longing a breakout, especially when the market's being balanced, it's not going to work out, and usually they're going to stop them out. So as soon as we broke this downtrend line and got 10 points out of the market, I scaled out some of my position right over here at 10:35 when the market looked just like this to protect myself, especially with the current conditions and what we've been recently seeing in the market. I need to take profits fast because a lot of the moves have not been convincing and a lot of the moves have not been met with strong continuation. So then the market sells back off into 4125, 3, 4, 6 other times, that if you do not get long where I got longed at this oval, this area right here also provided a nice opportunity to also take the market long. Now, to be honest with you guys, if I didn't exit some of my position over here at the highs, I most likely would have exited on this dip, and then I would have looked to re-enter once 4125 held. But because I sold some of my position and basically lightened the load, I was comfortable holding this pullback and then only exiting once 4122, 4120 did break. So this also provided a nice opportunity to take the market long again for another move up. And at this point, now I'm in the Discord saying another good rally to the upside. 4140 is the gap fill. Then the market rallies up, break the high, and I exit the remainder of my position over here for a very solid 15-point gain on a 5-point risk. About a 3-to-1 risk to reward. Now the market directly after that kept moving higher. We eventually dipped down, and if I didn't take profits over here, I would have probably also sold on this sell-off to the downside. Now we can look back at it and say, okay, we dipped down again into 4125, which also provided a nice other opportunity to take the market long into 4152, which if we read the pre-market plan, that if 4125 gets supported, we're going to see a rally into 4152 supply, which sellers may appear from yesterday. The market hit 4125, rallied all the way back up into 4152, where we're having trouble end of day. This is what I mean about using price and volume, putting the pieces of the puzzle together, and making your analysis as clean and as simple as possible. And on my Instagram story on the 14th, on Tuesday, Valentine's Day, I reviewed the setup from that day's action. And essentially on Tuesday, what we saw was the same exact thing. The market sold off below 4125, immediately reclaimed 4125, and then I used that as an entry point to scalp the market long into the upper supply zone after the CPI data failed at 4186 supply. So this is essentially where the market rallies into supply prior to the news. The news gets released, the market sells off from this level, and we get a sell off from that reclaimed support, and then a move back up into where the selling initiated prior to the CPI data. So I'm going to end the video on that note. I hope you all learned something from it. Every time I post these videos, I get questions about the Discord. The Discord is only available and it's free and included for members of the Invest to Trade course. But I'm ending it. Peace out.